today we're plunging into, well, a really powerful idea. Imagine a life where you don't actually have to work,
Right.
where your income, it isn't tied to a job, right? Instead, it's to fuel your passions, to finance your life's mission, whatever that might be.
Mm.
It's about having that financial freedom to look back and say, you know what, I'm glad I did that, instead of, well, the opposite I wish I had.
That really is the vision. And our mission today, well, we're going deep into the core principles of building real financial wealth through real estate. We're drawing heavily from the Millionaire Real Estate Investor.
Okay.
And we're not just going to unpack how to invest, but maybe more importantly, how to think like a successful investor.
Yeah.
Really put your money to work for you.
Yeah, and we get it. I mean, for a lot of people, that word investing, it can bring up images of, I don't know, complexity, maybe even fear. But we're going to tackle those common fears, those misconceptions head on, show you how to navigate them with maybe surprising clarity. Because that first step, it isn't about the numbers, is it? It's about your mindset.
Exactly. It all starts there.
Okay, so let's unpack this term, financial wealth. What does it actually mean, according to the source?
Well, it's defined pretty clearly as the unearned income to finance your life mission without having to work.
Unearned income, that immediately shifts the perspective, doesn't it? It's not just about being rich. It's about freedom, purpose.
Right. But even that idea, that freedom, it can feel a bit daunting for some people almost, like too good to be true. And that's often where fear creeps in.
Yeah, that fear thing. It's huge.
It is. And the source talks about fear like a river, something you can build a bridge over. But think about what fear specifically blocks opportunity. Is it losing money? Is it the complexity? Something else? The book suggests don't be afraid of the fear, respect it, let it show you what matters, but then keep going, move past it.
So the opportunity is on the other side.
Your financial opportunity, yeah, it lies right on the other side of those investment fears. And here's the surprising thing. Anyone can do it. Not everyone will. It's about taking that first step across the bridge.
That Monopoly analogy they use, that really sticks with you.
It does, yeah.
Makes you think how often maybe you play life like it's just chance, waiting for a lucky roll.
Right, waiting for Boardwalk and Park Place to just land in your lap.
Exactly. But the book really hammers home that success comes from strategy. Lots of people think investing is just luck.
Uh-huh.
But the best investors, the tried and true champs, they don't count on luck. They actually make luck unnecessary. Proven strategies, time-tested models, it's intentional.
In talking about strategy, the author shares that big wake-up call, the $100,000 lesson.
Oh, yeah. That was painful to read.
Right. He missed out on a huge profit from a condo deal because, in his words, he hadn't yet become a true investor. He realized he was asking the wrong question. Not, should I make an investment, but is this the deal?
Subtle difference.
Huge difference. A true investor acts when the opportunity is there, not just when they feel ready.
So this shift from riches to wealth, for the average person listening, that feels like a fundamental rewiring of how we think about money, right?
Yeah.
What's the biggest hurdle there?
That's a great question. I think it often comes down to our ingrained habits, and that's exactly where the money matrix comes in, and Nina's rule.
Okay, the money matrix.
Yeah, it highlights this critical distinction. Investors, they prioritize capital first. They see money as an opportunity to invest.
Right.
Consumers, on the other hand, prioritize consumption first, spending it.
Makes sense.
Anita's role, it emphasizes that your ability to build wealth isn't just about the big decisions. It's also about your everyday financial posture, those small spending choices.
So the little things add up.
Massively. The book says millionaires pay themselves first, second, and last. That's not just a budgeting trick. It's a whole mindset shift. Think about it. What does it mean, psychologically, to treat saving or investing like it's a non-negotiable bill? That one choice can rewire everything.
That's powerful. It's changing your relationship with money, fundamentally. And the tool for getting clarity on this, the source says, is the personal balance sheet.
Exactly.
Inspired by an old college friend, Michael, the author started tracking weekly, asking just one simple but kind of profound question. How can you make that number grow?
Yeah, it brings that laser focus, forces that capital first thinking.
Okay, so mindset shifted. Now, let's bring it home. Why real estate? Why does the source highlight this as the most able investment?
Well, it breaks it down into several key attributes, these unique abilities.
Okay, look at what?
First off, it's incredibly accessible.
Accessible, how so?
Well, it's pretty easy to understand, right? Buildings, land, it's tangible, it's easy to find properties, And crucially, it's easy to finance.
Because it's collateral.
Exactly. Significant insurable collateral. Lenders feel secure. That's a huge advantage for you compared to, say, trying to get a loan for speculative stocks.
Got it. Okay, what else?
Second, it's appreciable. It generally increases in value over time.
Right, we hear about that.
Historically, the numbers show it's increased around 6.1% a year, which actually outpaced inflation by an average of 33%.
Wow.
Simple drivers, really. General inflation plus population growth, basic supply and demand. It's almost like a built-in hedge against inflation.
Okay, accessible, appreciable.
And here's a big one. It's highly leverageable.
Leverage, that word can sound risky.
It can, but here it means you can control a large asset, a whole property, with a relatively small down payment.
Right.
The source gives this great example, making a $9,150 gain on just a $30,000 investment. That translates to a 30.5% rate of return.
That's huge. But back to the risk point. For someone new, how does the book handle that risk aspect of leverage?
That's crucial, yeah. The book stresses due diligence, buying right, understanding your numbers. It's about smart leverage, not just borrowing wildly. And you're leveraging a tangible asset, which adds a layer of security.
Okay, smart leverage. Got it.
Building on that, another powerful aspect. It's rentable.
The tenants.
Exactly. Tenants literally pay down your mortgage for you. That relentlessly builds your equity.
So you get unearned income.
Yes. Positive cash flow, that's the goal. And it creates what they call an investment triple play. Appreciation, the debt being paid down, and positive cash flow. 3 ways to win.
Nice. Triple play. I like that.
And it's not just passive. It's also improvable.
Meaning you can fix it up?
Right. You can add value through sweat equity, actual repairs, renovations, or even mental creativity, like figuring out how to rezone a property to unlock more potential. You have control.
That's a level of control you don't get with stocks, for sure.
Not usually, no. And then there are the tax benefits. Real estate is remarkably tax advantaged.
Okay, how does that work? Depreciation.
Yeah, depreciation is a big one.
Yeah.
The IRS lets you deduct a portion of the property's cost each year, assuming it's wearing out, even if the market value is actually going up. It reduces your taxable income. Plus, you have things like 1031 exchanges.
Right. I've heard of those. That's tax deferred.
Exactly.
Right.
You can sell an investment property and roll the proceeds into another like-kind property without paying capital gains tax right then. Keeps your money working and compounding faster.
Okay, that's a significant advantage.
Definitely. Then it's also pretty stable.
Stable compared to what? Stocks.
Real estate tends to be slow to rise, slow to fall. You don't typically see the wild daily swings like in the stock market. It moves more deliberately, provides stability.
Less stress, maybe.
Can be, yeah.
Yeah.
And finally, maybe the most unique one. It's livable.
Right. You can live in it.
It's the only investment that can literally put a roof over your head. Fulfills a basic need while building wealth. So you combine all those abilities, it really makes a strong case.
Okay, that's a compelling why. Mindset's right. We see the power of real estate. So how do you actually do it? How do you execute? Does the book give us a roadmap?
It absolutely does. It lays out 5 clear, proven models. The idea is these models help you bypass years of trial and error, get predictable results faster.
Okay, model 1.
Model 1 is the net worth model, applied practically. We touched on this. It's about budgeting for investments like the required spending.
Paying yourself first.
Exactly. And consistently tracking that personal balance sheet. That's how you gain clarity and intentionally grow your wealth, not just hoping it happens.
Makes sense. Model 2.
The financial model. This really boils down to 2 things.
Yeah.
Equity buildup and cash flow growth. The motto is simple. Buy it right, pay it down, pay it off.
Sounds almost too simple.
Well, the execution takes discipline, but the concept is core. Equity builds up through 1, market appreciation, and 2, the debt being paid down month after month.
Right.
The source shows how a $90K home could become worth almost $170K in 15 years. Plus, you gain equity from paying down the loan.
Okay. And cash flow.
Cash flow growth comes from buying right, financing smart, controlling your expenses. Get that positive net cash flow.
Yeah.
They share this really cool 20-year investment story, showing how buying just 15 median-priced homes at a good discount could lead to like $1.6 million in equity.
Wow.
And interestingly, that's really close to the $1.5 million median equity that actual millionaire real estate investors in their study held. So it shows the power of consistency.
Okay. Net worth, financial. What's next?
Model 3, the work network model.
The team aspect.
Exactly. The mantra is, together, everyone achieves more. The source is clear. Your success is hugely influenced by the people around you. This isn't a solo journey.
So who's on the team?
You've got your inner circle mentors, maybe partners, your support circle lawyers, lenders, property managers, and your service circle inspectors, contractors, plumbers,
Right. People who do the work.
Yeah. And the strategy is build it, maintain it, engage it. You got to proactively build these relationships before you need them.
How do you do that?
By asking questions like, who do you know that I should know? Or what would you do if you were me in this situation? Building that social capital.
Proactive.
And there are 5 rules of engagement for your reputation. Do deals. Keep your word. Don't talk bad about anyone. Don't shortchange anyone. And refer business to your network. Simple stuff, but builds trust.
Okay, that makes sense. Reputation is key. Model 4.
Model 4 is the lead generation model. This is all about finding the deals.
Okay.
And the idea here is the quality is in the quantity. Finding great opportunities is a numbers game.
How much of a numbers game?
The stats they quote are something like, you might investigate 250 potential opportunities to find just one actual deal worth doing.
250 to 1. Wow, that's a filter.
It really is. So first step, what are you looking for? You need clear criteria, location, property type, price range, condition, all that. This creates your all properties bulletin, like a wanted poster for your ideal investment.
Okay, then who helps you find it?
Key people. Owners themselves think for sale by owner, FSBOs, or listings that expired didn't sell. Then intermediaries, bank officers, attorneys, people who know about distressed situations. And finally, your leads network scouts, bird dogs, people out there looking for you.
Got it. And how do you find it? What are the methods?
The source contrasts 2 approaches, prospecting and marketing. Prospecting is actively seeking opportunity calls, research, digging. Marketing is attracting opportunity signs, mailings, ads, maybe a website. The key focus should be on being a solution to people's property problems.
Like those "We Buy Ugly Homes" signs.
Exactly like that. They tell a great story about Barbara Matson, who helped people avoid foreclosure by taking over their mortgages. It was a win-win. She solved their problem and got an investment.
Creates a different dynamic.
Totally. And it fosters this shopping mentality. The book says, be a shopper, not a buyer. It's better to miss a good one than buy a bad one.
So don't get attached.
Right. Investors live for the hunt, the process of searching, not just the final purchase.
Okay, makes sense. That leads us to the final model.
Model 5, the acquisition model, how you actually get the property.
Right.
And there are basically 2 paths here. Focusing on immediate cash or building long-term cash flow and equity. Your strategy really dictates the outcome.
Okay, what are the cash-focused ways?
Things like find and refer, find a deal, pass it on for a fee, control and assign, get it under contract, sell the contract. Or just buy and sell, or buy, improve and sell, flipping.
Flipping, we hear a lot about that.
Yeah, these can generate cash faster, but the source argues they're more like a job. You stop doing it, the income stops. Trading time for money.
Okay, so what are the wealth-building options?
Those are things like lease option, buy and hold, and buy, improve, and hold. These are designed for that long-term cash flow and equity buildup.
The slower, steadier path.
Generally, yeah. And the absolute foundational rule for any acquisition is buy it right.
Meaning get a discount.
It's a significant one. Ideally, at least 20% below the actual market value. That's your built-in margin of safety.
20%.
And they really stress using detailed analysis, like their terms worksheets, including concepts like FARV,
FARV. What's that?
fast after repair value. It's a quick, crucial calculation to estimate what a property should be worth after you've done the planned improvements.
Ah, so you don't overestimate the potential selling price.
Exactly. It stops you from fooling yourself and ensures you truly buy it right from the very beginning.
Okay, got the models. So you've thought like an investor, you've used the models to buy. Now comes owning it, managing the investments. This seems like where the complexity could really creep in.
It can seem that way, yeah. But the source says veteran investors actually learn to simplify things. They find joy in mastering the details, but they also warn, don't get sidetracked by greed, speed, or novelty. Stick to the plan.
Okay, so what are the key issues in this own a million phase?
First one is stick or switch. Basically, pick a niche like small apartments or single-family homes in a certain area and master it.
Don't jump around.
Right. Repetition is the mother of mastery. Don't cash out too soon or chase shiny objects. Become a specialist. Which niche, thinking about it, might appeal most to you, and why stick with it?
Good question. Maybe focusing avoid spreading yourself too thin. Okay, what else?
Second, become an expert in your local market. Really learn it deeply.
Boots on the ground stuff.
Totally. The book talks about spitting and whittling with locals and, just talking to people. That can reveal hidden opportunities and dangers that data alone won't show. Know your neighborhood.
Yeah, local knowledge is powerful. Third.
Think in units. Millionaires often prefer multi-unit properties.
Why is that? Economies of scale.
Exactly. Consolidating management costs boosts profitability. Plus, think about vacancy. One empty apartment in a 20-unit building hurts way less than your only single-family rental being empty.
Yeah, spreads the risk. Good point. Fewer entities, insurance policies, tax returns.
Right. Saves hassle and cost. Okay, fourth, creative financing.
Finding ways to buy with less cash down.
Yeah. Things like getting the seller to finance part of it, owner financing, taking over existing loans, assumptions, or wrapping loans. Understanding what lenders need, good credit, equity, cash flow is key. Your reputation matters here too.
Leveraging more than just money. Okay. Fifth.
Maximize NOI, net operating income. This is all about running your investments profitably.
How do you do that?
3 main levers. Increase gross rental income, maybe rent escalators in leases, short-term rentals, furnished units, government programs. 2, control expenses, do smart cost-benefit analysis on repairs. 3, minimize vacancies, anticipate them, market quickly. It's constant optimization.
Like running any business, really.
Exactly. Next, protect your time. Your time is super valuable.
So hire property managers.
Yes. Delegate. This leads to what the source calls the 7th level of people leverage. Don't get stuck fixing toilets if your time is better spent finding the next deal. What do you think is the biggest mental block for new investors letting go of that control?
Ooh, probably fear someone won't do it as well, or maybe the cost.
Both common, yeah. But the book argues true wealth comes from freeing your time. And related to that, protect your assets.
Legal stuff, LLCs.
Yeah, entity structuring, estate planning, do it early. The source warns waiting is costly and can lead to mistakes you can't fix later. It protects you whether you fail or succeed.
Good point. Need protection both ways. Eighth.
Be learning-based. Investing isn't a one-and-done thing. It's lifelong learning.
Always a student.
Right. You progress from just understanding to knowledge, then wisdom, and finally power, becoming unconsciously competent. The best are always learning.
Love that. And the last one.
Finally, be accountable. Success, they say, is like 10% goal, 10% plan, but 80% accountability.
80%. Wow.
Feedback is the breakfast of champions. Get an accountability partner, coach, mastermind group, someone to keep you on track. It's about showing up for your goals consistently.
Okay, so think, buy, own. We've covered a lot. Now, the payoff. Receive $1 million. That sounds like the ultimate goal. Is it achievable?
The source suggests the path to $1 million in annual cash flow can be, and they use the phrase, comparatively easy for those who really internalize and execute these principles.
$1 million a year? How?
Well, it demonstrates the power of consistent investing over time, maybe 10, 20, 30 years, depending on your pace and the market.
Yeah.
But a key concept here is using equity pullouts.
Refinancing.
Exactly. Periodically refinancing your properties, pulling out some of the equity you built up. The IRS views this as loan proceeds, not income, so it's effectively tax-free income at that moment.
So you unlock the value without selling.
Right. And then you can reinvest that capital to buy more properties, accelerating your growth. It's a powerful wealth building cycle.
That makes sense. And you mentioned an inspiring story.
Yeah, the story of Investor 34. This person built a real estate business generating $12 million in annual profits.
$12 million?
While only working about 20 hours a week.
Okay, now that sounds almost impossible. How?
That's the epitome of the 7th level we talked about. People leverage.
Building a team that runs the business.
Exactly. You evolve from doing everything to hiring admin help to property managers, eventually to talented leaders running the whole operation. It frees your time completely. It's about building a system that works for you.
Wow. That's a different level of thinking.
It really is. And connecting this to the bigger picture.
Yeah.
The journey goes from accumulation to potentially distribution.
Giving back.
Yeah, the source quote, "'Tis better to give than to receive." The ultimate gift of building wealth is maybe the ability to share it, how money can be good for the good it can do. They mention people like Eli Broad who gave away billions.
So it's not just about the money itself.
Not at all. So what does this all mean for you listening? The journey to receive $1 million, it's not just about hitting a number. It's about linking your financial goals to your purpose, your life mission, achieving like an abundant life in all areas.
So today, we've really explored the mindset, the reasons why real estate is so powerful, and those practical models for building serious wealth, thinking, buying, owning, all leading to that goal of receiving $1 million.
And that journey to receive $1 million, well, it really ends where you decide it ends. So here's a thought to leave you with. If money truly wasn't an object for you, what big difference could you make in the world? What new possibilities open up when you start seeing financial wealth not just as an end goal, but as a tool for your biggest aspirations?
That's a powerful question. We really encourage you listening to take that next step, whether it's big or small, on your own path, your path to financial wealth and to living your biggest life possible. Godspeed and good fortune.